Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, there's plenty for us to get into this week, specifically as we talk WASDE, which is what everybody's eyes have been on. But let's start first and talk about what happened this week in the markets.
We'll start on the positive side of the equation here a little bit, talk cattle markets, if you will. So live cattle prices this week up about 75 cents for the week, while feeder cattle steady to $2 higher. And we got some even a little more strength in some lightweight calves this week as well. If you look at the October live cattle futures contract, down to $1.50 this week, while the September feeder cattle futures closed down nearly $2.50 for the week. On the beef side of the equation, choice box beef price was up nearly $2 this week. We saw some strength on the rib side that I think was helpful when you look at where that choice box beef price was for the week. Unfortunately, on the hog side, more negative news to go along with kind of the trend we've been on of late. Barrows and gilts cash prices for this week down nearly $6 for the week. If you look at that October lean hog futures contract, the good news here, maybe up, it was up $1 as we closed this week. On the pork cutout side of the equation, we were down $2.40 this week. That puts us 25 cents a pound below where we were a year ago at this time. Phenomenal difference between where we are in terms of beef prices versus pork prices. That choice box beef price is actually up nearly 5 cents relative to where it was a year ago at this time, while we're down 25 on the pork side. In terms of what's been driving that, pork bellies down 19 cents. We're below $1 on pork bellies. They're about half the value they were a year ago at this time.
Scott, when we talk about that belly market in general, I know we saw that we were down below $100 this week, and that's one thing that we've not seen in a really long time. How nervous does that make the hog market to see that type of decline, 19% and 50% below where we were a year ago?
Yeah, it certainly just reminds us of how big supplies are, and folks can certainly, I think, sit on the sidelines for a longer period of time right now, not worrying about whether there'll be adequate supplies of bellies in the marketplace. They know what's coming as we continue to finish 2018. So why get in a hurry to purchase too quickly? And so I think that mentality really drives prices, especially on the belly side, lower than otherwise would be the case. And I go, that's just the flip of where we were a year ago in terms of there was a lot of concern about tight belly stocks and what's available for me out there. And folks were perhaps buying bellies, driving prices even higher than needed to be the case, just worrying about being on the short supply side of the situation. It's amazing how inelastic these markets tend to be to prices, i.e. very small changes in underlying supplies can make for some pretty big price effects. And going from $2 to $1 in bellies in a year is just some pretty wide swings in prices.
With this cash hog market, this is a horrible question to ask, but is there a bottom in sight? We know that there is this huge supply of hogs coming, where the slaughter estimates for Saturday scale are in the 100,000 head range again. But there's all of this demand uncertainty. Does that just continue to push prices lower?
Well, I think we know from the supply side that's all that's going to happen as we go through the remainder of the year. The pressure for prices to be lower on the hog side, just given runs that have to be coming between here and the end of the year. It's going to take some pretty stellar demand to change that situation. Now, you flip that around and go, can we get a bilateral with Mexico to finally finish? Can we get some stronger consumer demand out there continuing through the remainder of the year? That might be part of what offsets this growing supply situation. I've reminded producers a lot when you think about, so we knew this expansion was occurring in the pork industry, and it's been occurring for a number of quarters. And I think the industry understood that growth really needed to be driven outside the United States or exported. And that hasn't been the case the last few months in terms of what's been going on. But if you flip that back around and start exporting the additional supplies you're putting on the marketplace, that might get us into a more positive situation, despite what I think will be some weakness as we finish 2018. And, Megan, we've alluded to this several times. As you think about what's going on for shackle space, whether we have enough labor in these facilities as we get here at the end of the year, all this is going to be a lot closer in terms of capacity than we would have thought a year ago at this time.
Because we haven't even seen the fall peak when it comes to slaughter runs on the hog side of the market yet.
Yep, yeah, absolutely. And again, I'll just remind folks, even if we get by that constraint, when you put more pork on the marketplace, you tend to have to move it at lower prices. And all that's just going to be a struggle for us, especially when the competing meats are doing nothing but increasing as well.
Let's talk a little trade while we're on the topic of demand. Monthly trade data came out this week, and man, another big month for U.S. beef exports.
Absolutely, boy. It's 2018 has been a good year when you look at what's been happening. We were up 16% June over June in terms of U.S. beef exports. That's the fifth month out of the 6 here in 2018 where we've seen double-digit export growth. That's what we need if we're going to talk about prices going up. And in fact, you might be able to correlate some of what's going on where we talk about a choice box beef price higher than where we were a year ago at this time, whereas where we're at on the pork side. South Korea, important to that increase, 50% increase from year ago levels. Taiwan, Japan, Mexico was also still strong, so despite we talk about some of those places where tariffs have been an issue, we saw some pretty strong growth in terms of beef exports to Mexico.
Pork hasn't had the same story, but if you look year over year, we're still up at this point. How did those numbers shake out, and how much have we started really to see the impact of those tariffs in these numbers yet?
Yeah, so we're finally with the June data starting to see a little bit, because if you remember, we would have had some Mexican tariffs on pork starting to take place in June. So when you look at the June data on the pork side, up about 1% relative to a year ago. So we were higher. If however, you look at some of the countries, so China, for example, down 34% relative to where they were a year ago at this time. China generally bought 20% less pork for the second quarter of 2018 relative to a year ago. Thank goodness, though, we have some new markets. South Korea increased significantly from a year ago, 28% higher. And so I'm really interested to see where we start going in July and August. Too often I will hear producers who will say these large tariffs are the reasons why we have lower prices today. And I would just remind them that certainly adds to the situation, but the kinds of increase in supply we can't forget about that's driving prices lower as well.
We keep talking about, and this probably is not necessarily where this conversation needs to go, but we keep talking about more pork on the market and being able to move more pork. When you look at weekly hog weights this week, we were up 2 pounds, and we had some setbacks on slaughter totals last week and slaughter runs, but up 2 pounds on the week, up 3 pounds on the year. How does that play into being able to find a market and have a place for all of this pork to go? It
certainly is an additive problem, right? So situation where what might be more of a 4% growth in pork supplies for the year becomes a 4.5 or 4.75% growth in pork supplies, as weights just add to the overall situation of more pork on the marketplace. So we want to stay as current as possible, yet we remind ourselves corn prices are a heck of a lot lower, and feed continues to be a fairly good deal, perhaps making folks decide to feed a little bit longer, all else equal.
All right, if we're going to talk about corn prices and inputs and how that all figures in, let's talk a little WASDE. Like everyone else, livestock producers are watching for those yields that came out today from USDA. And you have to think that they maybe took a little bit of a sigh, were able to breathe a little bit of a sigh of relief when they saw those numbers today as well.
Yeah, from a feeding perspective, when you talk corn and soybeans here for a minute, it's good news that we got out of USDA for at least for livestock producers, not so much for crop producers. USDA on the corn side pegged this year's corn yields at 178.4. That would be a record level and is a little more than 2 bushels an acre above the average pre-report estimate. So USDA came in above what folks were anticipating, and that's above the 176.6 yield that we saw last year. So pretty good corn yields. Certainly been tough on corn futures, at least so far today, since that report came out. But equally impressive, USDA pegged soybean yields at 51.6. That's above the average pre-report guess of 48.5 by a little more than 3 bushels. Not quite a record on the soybean side because we pegged 52 there a couple of years ago, but still pretty impressive and should keep both corn and soybean prices under pressure here for a period of time. And futures movements today certainly suggested both corn and soybean prices were moving lower. There are some exceptions in terms of some dry weather in some parts, Missouri in particular, where both corn and soybean yields are below year-ago levels, but that's the exception, not the rule, as much of corn country and soybean country has seen pretty good weather.
And while there was some great news for livestock producers in terms of inputs that came out of this month's report, there's also has to be a little bit of concern, especially as we take a look at the numbers that came out, and we don't talk about this all the time, but on the hay yield side of things.
Yeah, so we do have probably more dry weather situation affecting us in terms of hay than some of the other commodities. USDA said today a U.S. hay yield of 1.88 tons per acre, which compares to a year ago, we were at 2.05. So, down in hay yields relative to a year ago. I look at Missouri. Last year, we had a hay yield at 1.95. And when I say hay yields, I'm thinking of hay other than alfalfa. USDA estimated Missouri hay yields at 1.4 tons per acre this year. So you see the cut that we have in some of these dry areas, Oklahoma, Texas, equally problematic in terms of where hay yields go. It has really set hay prices on a much higher trajectory for many of those in cow-calf country that are looking for hay at this point.
We talk about the dry weather and its impact on the hay crop, but you also bring up an interesting point as we talked about markets this week, an increase or more lighter weight calves. Is that having to do with the fact that we're seeing such dry weather in some of the large cow-calf areas and also, just cattle producing states in general? And does that come into play with these higher hay prices?
Yeah, so I think a lot of folks are going, what's my options in terms of trying to stretch this out? Do I want to cull some of my very low-end cows? Do I want to send calves earlier? I think they're all looking at their own hay situation and making those decisions. Now, I remind folks all the time, this year with the dry weather in the parts of the country that we have, it is very different than the 2012 drought that we faced not that long ago. And I say that because there are some good feed alternatives out there that one has to look at. When you went through the 2012 drought, not only did we not have hay, but we had very little corn, et cetera. So you wanted to talk about more corn in that diet. That was a $7 a bushel decision that you were going to make. Whereas today it's more like 3 1/4 or even less in some parts of the country. So there's some alternative feedstuffs. I tell cow-calf producers all the time, please think more carefully about those alternative feeds, because I think there's an opportunity to help some of the growth in hay costs that you face by looking at those substitutes. So we'll wait and see. But I certainly hear a lot of folks who are thinking about moving calves sooner than normal. Anecdotally, all the time here in Missouri, we talk about large runs of cattle and cows going to sale barns here in the state. The data is not quite there yet. We have been growing in terms of those runs of late, but I think the next 60 days will be really critical to see if we get a lot of spring calves that otherwise might stay on the farm for a little while longer, headed to these auction markets and out of the way sooner just because of lack of grass and maybe more importantly, water in some cases.
Definitely something for us to keep an eye on as cattle producers look ahead and seeing the facts. Obviously, this crop is not necessarily in the bin yet either. Things can happen. How do they manage that downside potential? We know that there's concerns about supply there as well, but to be able to manage their profitability, knowing what they know, taking a look at these numbers.
I will say all the time, for me, cow-calf producers are the least flexible set of ag producers that we have. And I don't mean that in too much of a negative way, but we tend to talk about cow-calf producers doing the same thing year after year after year with very little change in the way they operate. Now, I will say this year in particular might be the year to show more flexibility, i.e. some will say, I'll never feed anything other than hay. And I just go, now's the time to take a pencil to that and go, do I want some soy hulls in that ration? What do I want to do to try to reduce that cost? And I will say you got to think a little bit longer term here as well, because some of the drought issues we're facing has probably really put some crimps on the expansion on the cow side. And so some strategy about how many cows do I want in 2019 and 2020, I think are important planning decisions to be made today in terms of, do I want calves to go earlier or do I want cows to go earlier? If I have to make that choice about I can't keep everything that I normally do, again, flexibility I think could be helpful to them, and they really should think about that hard.
Scott, really, we wanted to be able to take time to get into both the trade data and WASDE this week. We know retail prices came out this week. Next week, we also have, what else?
Consumer confidence will get on Friday as well.
So we can talk a little bit about those two things and how it relates back to domestic demand here in the U.S. Anything else this week?
I think we've covered the topics.
All right. Have a great weekend. We'll talk to you next Friday.
Very good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe, and you can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.